Hey all, my name is Dr. Paul Borosky, and I'm the owner of Quality Business Plan as well as Quality Business Consultant. And today what I'd like to do is talk about my business tip number 20, which is know the difference between a budget and financial projections. So the first thing to know between a budget and financial projections is the definition. A definition of financial projections is an estimate of your revenues and your costs for the short term as well as the long term. For your budget, a budget is an estimate of your expected income and expenses for the short term, usually within 12 months. Now, typically what you'll do is you will start with your financial projections, and then you will use your financial projections to create your budget. So your financial projections are overreaching and broad, and then your budget is going to be short term and is going to be narrow in scope and focus within the next 12 months. All right. Also, what you need to know is going to be that between a budget and projections is going to be the purpose. The purpose of your financial projections is to give the reader an expectation or what your thoughts and ideas are about how your revenues are going to grow in the long term, and it's also to show the reader how you think your costs are going to grow in the long term as well. Now, for the purpose of a budget, well, that's to control your expenses. You want to be able to set a budget for the next 12 months or the next 6 months and make sure that you are hitting your revenues where you need to have your revenues are. You're controlling your costs. You're making sure that your variable costs are not getting out of control. You're making sure your labor is in line with your expectations and it's in line with your revenues. So next is going to be accuracy. Your budgets, they should be accurate. They should be pretty darn close, and you should use those as a threshold that you don't want to go over, especially, well, you don't want to go over for your costs, or you can go ahead, you can exceed those for your revenues, but you want to make sure that your costs are in line with your budget. And if they're not, you need to step back and ask yourself, why not? And how can we control our costs to better align with the budget? And then finally is going to be time frame. As I alluded to earlier in this conversation, your financial projections are going to start day one, and they're going to go on for the next 12 months, the next 3 years, next 5 years, and sometimes you can even do your financial projections 10 years out. Doesn't mean they're going to be accurate, but you can go ahead and do those for that time frame. For your budget, you want to go ahead and create your budget for a maximum of 12 months and try to keep a flexible budget, and update your budget monthly. So you'll project your budget for the next 12 months, and then after 1 month, you'll go ahead and update that for the next 12 months. That's called a flexible budget, and it helps you stay on top of your expenses, and it helps you better align your revenues on a monthly basis. All right, hopefully this information was helpful. As always, if you need a business plan writer or a business consultant, feel free to reach out. Thank you.